Hi there everyone, good afternoon and welcome to Market Fatafat. I'm Avan Dabash. With me is Vinny Motiwala and Cheryl D'Souza. Welcome back. Okay, let's take a look at the markets then. And 18,200 looks like we're skirting around those levels right now. So yes, that consolidation is pretty evident and it's across the board. So flat as a pie for the mid caps, the small caps as well as the frontline indices. It's not seeing too much of a move. In fact, in terms of individual sectors, the Nifty Bank Index has managed to perk up by about 0.6%, ditto those PSU banks and IT. But other than that, real estate is having a bit of a rough run today, 2% down on that sector, as well as pharma, FMCG and auto. Those are some of the other sectors under pressure. Well, let's run you through some of the movers then and check in on EIH. A double-digit gain is what you're seeing on that stock in trade. Jindal Saw as well is a buzz in today's trading session. You've got something like a Jindal Stainless as well that's active, MRPL, Polyplex Corp, as well as CEAT from the word go, and it's continuing to gain traction, a 3% notch up, along with something like Narendra Dale and PNB Housing. On the flip side though, Webhub Global slumps about 6%. There's JK Tyre under pressure. Godrej Properties loses about 6% or so. Brigade Enterprises along with KC International as well as Metropolis Healthcare are some of the losers in trade. Well, we've got lots lined up for you, haven't we, Vinny?
Absolutely. Very exciting lineup and all the stocks that we'll be talking about. But Kunal, firstly, thank you so much for joining with us on Market Fatafat. And before we start with all the stocks, what is your understanding of the markets now? Down move coming in, but what should we be expecting going forward right now?
Well, it's been a tough market over the last 3 days. 2 days of consistent selling for the indices yesterday and day before. Today there was some sort of a relief for traders who would carry forward positions from yesterday. But then on an intraday basis, it's been a choppy market as such. The indices are not reflecting the actual health or the internals of the market. As such, most of the mid caps and small caps are getting into a correction. So my sense is that we are into a choppy phase of consolidation. 18,000, 18,400, that's the range which we've been suggesting over the last, I think, many trading sessions. So till the time we don't see a breakout above 18,400 or a breakdown below 18,000, it's going to be difficult for short-term traders to try and look out for holding on to index trades. So makes sense only to trade on breakouts or breakdown.
Absolutely, that's the take coming in on markets, and as we speak, the markets are near the day's lowest point. Actually, we have actually slipped below the 18,200 as well. 18,195 is where the benchmark is perched at currently. Let's take a look at some of the candidates that are actually reporting their earnings as we speak. You have Shreyas Shipping. That number is flashing on the bottom of the screen. The stock has tanked in trade, 17% down, covering in for Shreyas Shipping at this point in time. But let's talk about MTAR Tech as well, and that particular counter had come out with its earnings. You saw a revenue uptick of about 99% on a year-on-year basis. You saw the profit also see an uptick of about 56%. But however, the EBITDA margin was down on a year-on-year basis. Let's connect with the management of MTAR Tech. Parvat Srinivas Reddy, who is the managing director at MTAR Tech, joins us right now on the show. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And what has actually contributed to the healthy growth that we've seen in the quarter gone by when you talk about the revenues, margins, and also if you could tell us, will H2 for you be stronger compared to the first half?
Yeah, see, always, as I said, the second half of the financial year is always much better than the first half, especially in an industry like us. And the basic growth is coming from the clean energy segment, which is moving ahead with additional customers, which we have roped in over the last 1 year. And this process will continue, and the direction of the company is to focus more on the clean energy area, including the nuclear energy, what we have been working for a number of years. So this will be the main growth areas moving forward as well.
Right. Your order book as on March 31st stood at around 1,172 odd crore rupees. What's the outlook for the order book and the growth, and also major orders? If you could tell us what's the major orders in the pipeline for your company right now?
So we have substantial orders which are going to flow in the current financial year. We're looking at almost like 1,200 crores of orders which we might get during the course of the year. And we might end up with a closing order book of 1,500 crores and odd by end of FY24. And this covers all the segments, whether it is nuclear, clean energy segment, space, etc.
Mr. Reddy, which is the segment that, according to you, will see the strongest growth? And can you just break it down for us in terms of your segmental growth?
Strongest growth obviously will be in the clean energy segment, which is moving very well. We are not only manufacturing the power units in the clean energy segment, also we are looking at energy storage systems moving forward as well. So we are diversifying within clean energy itself, not only in fuel cell technology, but also in hydel, wind, and waste to energy segments within that sector itself. So this has been our focus, and that's where we see the maximum growth coming in the future. And things have started moving in the nuclear segment as well, and we'll see substantial orders flowing in the current year for the new reactors, which the government is planning immediately.
Right, and the company has also inked that MOU with the Indian National Space Promotion and Authorization Center. Can you share more details on this MOU, what it brings to the table for the company, the timeline that you're working with?
No, as I said earlier, we have entered into MOU with InSpace to work on the design and development of a small satellite launch vehicle, which we are progressing very well. It's a 4-year program, and once we complete the design and testing of all the equipments that we are trying to do, then at the end of 4 years, we'll be able to do the first developmental flight, which is going to be a complete game changer as far as the space segment is concerned, in which we are working. So this will be a fully integrated system, and obviously it will take time, but once we do it within the 4 years span, it will give us very good results moving forward.
Right, Mr. Reddy, also just in terms of your export contribution, where do you see it reaching? What is the growth expected there? And are you also in talks with any global OEMs then?
We are in talks, as I said, right now, mainly in clean energy segment as well. We are looking at other segments also. But any of this joint ventures, what you're talking about, it has to be attractive to MTAR as such to get involved. So we're looking at various options. But apart from all these JVs we're talking about, or any kind of inorganic growth, we are purely looking at organic growth, which we are pretty confident to achieve, 45 to 50% revenue growth year-on-year basis moving forward as well.
Okay, Mr. Reddy, and also just are you revising in terms of your guidance higher for FY24, FY25 on the back of the healthy order book traction that you're seeing?
Oh, we have given a substantial, we have thought about it very carefully and given a guidance, and normally we stick to the guidance and also try to perform based on the guidance given, which we have always done. So we will still stick to the 45-50% revenue guidance, what we have said earlier for this year.
Okay, thank you so much, Mr. Reddy, for joining in with us this afternoon on Market Fatafat and giving us an understanding on what should we be expecting from the company going forward. But on that note, let's get started with all the other stocks that are buzzing in trade and in focus, either on the back of news flows or technicals. On the technicals, we have Kunal Bothra joining in with us, obviously, and from the research team, we have Lisa as well as Ankita joining in with us. A very good afternoon to everyone, and good afternoon to Cheryl as well as Ahan as well. Let me start with the first stock, and Jubilant FoodWorks, that's the one we're going to talk about. Obviously, we did have the CEO MD join us just a short while ago, Samir Ketarpal. He gave us an interesting commentary coming in there as well. Now, in terms of numbers, when you look at the numbers that came in for Jubilant FoodWorks, slightly in line set of numbers, we could say bit of a miss coming in terms of the profitability of the company, mainly because of the one-off that was there of around 20 crores due to the Sri Lanka business, which was facing a bit of a impact of the inflation and depreciation in the currency as well. And that margins also saw a bit of a subdued move there, and a contraction in margins on a year-on-year basis because of the inflationary trends and freight cost also being higher. But what the management is highlighting, what Samir Ketarpal also spoke to us, he said there are a few short term. Maybe some pressure could continue due to inflation, but other than that, as inflation will stabilize, they expect to see a bounce back coming in. Also in terms of the cheese, yes, cheese prices have been at a decadal high. They've faced unprecedented pressure coming in there, especially for pizza, because it's a critical part in terms of the raw material for pizza. So yes, that was a impact because of that on the pizza prices as well. And the company expects the pizza category overall to see a growth of around 13 to 15% as well. They said they want to focus more on innovations and tech focus going forward as well, and will continue to invest in tech. And obviously the company highlighted that they're not looking to acquire any other burger brand as of now, and obviously Popeyes is a good investment that they've made, and that is seeing a good growth going forward. So keep an eye out on Jubilant Foodwork. Yes, brokerages, some of them have cut the target price, cut their rating coming in as well.
All right, that's Jubilant Foodworks, and yes, the stock has seen a sharp recovery from the day's lowest point as well. And do catch that exclusive interview through the course of the day on the channel, also on the social media platform. Moving on, Weber Global is the next counter that you need to watch out for, because that particular counter is seeing a decline in today's trading session on back of the dip in their Q4 profits. So the stock saw a dip of as much as 6.2% earlier in the day, reaching the lowest level since April 6th. The company also posted the sharpest intraday percentage loss since December 23rd and is on course for a second consecutive day of decline. If you look at the company, they did a 14% decline in their profits for the quarter gone by. It's the 7th straight quarter of declines coming in for Weber Global, and that's the reason why you're seeing that sort of a sharp correction in the stock price as we speak. But while we are speaking, you have SBI's number flashing on the bottom of the screen, so watch out for that particular counter. The initial numbers that we've got is 16,690 crore rupees for the profits coming in for SBI. We're expecting a profit of around 15,000 crore rupees. That's the ET Now poll coming in for the counter. You can see the stock price 0.8% uptick coming in for SBI as of now. But what we are picking up from wire agencies is the fact that the profit is coming in at around 16,690 crore rupees. The Q4 provisions have come in at around 3,320 crore rupees, which is a decline of about 42% on a quarter-on-quarter basis for SBI. If you look at the gross NPAs, it's coming at around 2.78%. This is all from the wire agencies is what we are picking up. Do we have some more details coming in on that one? Absolutely. So, I've just opened up the balance sheet as well as of now. What you're seeing in terms of the profits of the company, what they have come in as it at 16,694. Wait, I will have to check on that as well. 16,694 is what the profits have come in at, versus last year is 9,113 crores. In terms of the non-performing assets, gross non-performing assets at 2.78% versus last quarter was 3.14%. So yes, improvement in asset quality is what we are seeing coming in as well. 0.67% is the NNPA at versus 0.77%. So yes, clear improvement that we're seeing in the asset qualities of the company as well. Provisions, let's look at the provisions that have come in. They are at 3,315 crores. Last quarter was around 5,760 crores as well. We'll be surely keeping an eye out on that NII number, which needs to be calculated as well. But as now, when you're looking at it in terms of what we're seeing for the profits of the company, slightly above in terms of the profits, and NII was flashing on your screens around 40,000 crores is what we're seeing the NII coming in at, almost in line with what ET Now poll was at as well. NNPS also, what we were seeing is seems to be in line with our expectations as well. So yes, seems like an inline set of numbers. We are keeping an eye out on the net interest margins as well. So keeping that in focus as well. Also, other than that, advanced deposits numbers, that's going to be a key factor to watch out for as well, Avan, as of now.
Absolutely. Let's connect with Kajal Gandhi as well, who's joining in on the show. Kajal, let's get in your take as the numbers are still trickling in with that net interest income at about 40,393 crore rupees, and the company is overall profit as well scaling up for the quarter gone by. What has been your key takeaway?
Yeah, hi. The results look quite strong. If you look at the bottom line numbers, they are largely above estimates, both R and Street at 16,700 crore. The credit growth also looks slightly higher than estimates, because even management was on around 14-15%. The credit growth looks like a 17% growth. And I think lower provisions than street estimates and then our estimates is, I think, one of the major reasons we are yet to see the NII calculation. What is the growth on the NII side? But it's a strong set of numbers, at least on the bottom line growth, etc.
Right, Kajal, you're saying a strong set of numbers. We also have Rahul Malani from Sharekhan joining in with us as well. Rahul, what's your take on this? A thumbs up coming in from you as well for SBI then?
So basically, there has been beat on the net interest income. It has come in strong at 29% YY, and sequentially also, it has posted 6% growth. And on the basically on the operating profit, it is below 4% RS and consensus estimates. And on the front, the big beat has come on due to the lower credit cost, as alluded by the earlier participant.
All right, that is, those are some of the factors driving the quarterly numbers. Just let's quickly check in on the stock price as well of SBI as it digests those earnings. Right now, you've got the capital adequacy ratio, which stands at 14.6%. As we told you, the overall asset quality has managed to improve. The stock seeing a bit of an aberration and now has mildly recovered from the lows of the trading day, 584. But wanted to understand from you what the outlook is in terms of the overall provision number, given that on a sequential basis, Kajal, we've seen their provisions come off by about 42% and the operating profit as well looks healthy. Any drivers for this?
I think they are having strong retail asset book and the overall corporate book for market as a whole, or industry as a whole is doing well. So if asset quality is not a worry for a bank like SBI, the entire top line goes to the bottom line. So I think credit cost remains lower and I think near term to medium term, we don't see too much on that. So that should continue for SBI, the lower credit costs. And that's why a healthy bottom line.
And Rahul, just a word on the asset quality. Obviously, we've seen a considerable improvement, better than what the street was expecting as well. What is your take on this going forward as well? What should we be expecting in terms of asset quality?
See, basically, asset quality is expected to remain benign in next few quarters, at least for the next 1 year. Key point to note will be the incremental ECL provision required, which has to be taken into consideration from FY25. So basically, if you look at the SBI has around additional provision outside PCR of around 110 basis points of the overall advances. So basically, in next 2 years, it could be it could shore up the additional provisions required to around whatever the numbers is required. So in the commentary, it will be important to see how much incremental ECL provision they will require.
You know, we're categorizing the number as pretty much profit being above street expectations, asset quality having improved, as well as net interest income coming in line. Why then, Rahul, are you not seeing that reaction play out on the stock price?
See, basically, operating profit is below consensus estimates. Around 4%. It has missed on operating profit second.
Right. In fact, let's just do further number crunching. Thank you, Rahul and Kajal, for joining in. My colleague Harsh joining in to break down the earnings for us. So, Harsh, what's the assessment?
Yes, net interest income largely in line with what the street was penciling in. 40,400 crore is where that number has come in at. That's a solid jump, 29% year on year. Operating profit too largely in line with what the street was. In fact, operating profit slightly better than what the street was anticipating. It's come in at just below 30,000 crore. We're expecting a number of around 25,000 crore. So that's really aiding the numbers overall. When we're looking at provisioning, that's come in at 3,315 crore, which is well below what most were expecting. We're expecting a number of around 5,500 crore. So that number is definitely much better than expected, and therefore the PAT has actually expanded much better than expected. It's come in at 16,695 crore, which is a solid 83% up on a year-on-year basis. Even sequentially, it's up 18%. We're looking at good NPA ratios as well. We've seen a 10 bips improvement with regard to the around a 6 to 7 bips improvement with regard to the net NPA ratio, which is coming at 0.67%. So overall, we are seeing the result as a much better result on the bottom line than expected.
Okay, thanks very much, Harsh, for giving us those details. Operating profit has come in below, and that, according to Rahul as well, is what the street really seems to be reading into, which is why you're not seeing that, healthy reaction or spike up in the stock price post its quarterly earnings. 583. Keep an eye out on the ticker screen, as we will keep you updated with SBI's earnings and internals. Okay, from one big set of numbers that just came out to another that we're closely watching out for then, ITC. And the street is going in with expectations that this time around the cigarette volume growth could come in close to 13 to 14%. Revenues are expected to come in at 16,624 crores. That's up about 7% on year, with profits seen higher by 15%. 4,833 crores is what the ET Now poll suggests. Now we're expecting EBITDA margins to come in at about 37% versus 33.6%. The gross margins and operating margins this quarter are expected to improve, largely on the back of the softening raw material prices and better operating efficiencies. The non-cigarette segments continue contributing strongly. That's FMCG, hotel, as well as paper. Hotel is a segment as well as expected to perform better due to healthy hotel bookings. The agri-business could see a bit of a decline in their revenues on year, with the street closely watch out for, of course, the headline numbers, the cigarette volume growth, then commentary on price hikes, FMCG growth, margins, as well as any demerger of the hotel business. That is definitely going to keep the market or the street on its toes. What's the stock up to prior to its earnings? Well, pretty much at the day's lows, down 1%, but it has been quite a performing stock for 23. Okay, let's move on to the next new stock then. And Kunal, IEX on your radar?
Yeah, it's been a very volatile stock, almost a V-shaped correction for IEX in the last 4-5 days. Corrected from 163 to at one point the stock it went below 155 levels. Now it's back above 160 mark. So this is a classic V-shaped recovery for IEX, indicative that the stock is ready for a bigger breakout. My sense is that post a confirmation of 163 levels on IEX, it could be a very interesting buy for a target of 175, 180 with a time frame of 1 to 3 months. So it looks very attractive on the short-term charts.
Very attractive on the short-term charts. That's a word coming in from Kunal for IEX. Let's go on and talk about Honeywell Automation. Lisa, how are the numbers for this one?
Show on Honeywell Automation on Q4 earnings, and that is the reason the stock is soaring in today's trading session. Let's look at the numbers. The PAT was up 54%, and that was on the back of strong top line as well as the operating numbers. Revenue was up 27%, while the EBITDA was up 60%, and also quite a significant improvement in the margin. It was up 16% from 13% last year. Also, let's see what's the word coming in from analysts. According to Nuvama, they believe that the cost inflation as well as the chip shortage that has eased off, and that has led to better execution on the revenue front. But they have also flagged off that they require better clarity on emerging segments as also the parent mandate. So that's on Honeywell Automation. They are soaring on the back of very good set of numbers.
All right, that's Honeywell Automation soaring in trade today on back of good set of numbers. Brokers thumbs up. But Kunal, ICICI Bank, will you give this one a thumbs up or continue to give this one a thumbs up?
Well, relatively, it's been one of the best performing private sector bank or the large cap private sector banks in the last 1 or 2 months, as well as over the last 2.5 odd years, where at a point most of these other private sector names, Kotak Bank, HDFC Bank, etc., these stocks were consolidating. Now, the reason why I picked up ICICI Bank is because the stock is nearing a 3-day swing breakout about 950, 955 mark in futures. So I believe that on confirmation of a breakout about the 955 mark for ICICI Bank, this could potentially be a breakout which can take the stock towards 1000 plus levels for the first time. So it's a stock which has to be on traders' radar, specifically post a breakout about 950 mark on the spot levels as well as 955 on futures.
Okay, let's move on then to stock number 7 for today, JK Tyre. Ankita, what was the number looking like for this one?
That's right, Vinny. The stock is in news on the back of the quarter results that it posted. If you look at the results, the profit rose nearly threefold as the raw material costs fell and the domestic demand saw a big boost. Now, the net profit is at 108 crores as compared to 40 crores in the previous year. Its revenue from operations grew almost 10% and the EBITDA was up 65% on a year-on-year basis. Now, JK Tyres also achieved its highest revenue of 14,600 crores during FY23, registering a growth of almost 22%. Now, this was on the account of the growth coming in the domestic demand that was witnessed in the key segments like the commercial and the passenger vehicle segments. However, the stock is down almost 6% because that is primarily on the back of the fact that the results, even though the results were good, they were not on par with the industry peers, and that's the reason why perhaps the stock is taking a beating in trade today.
All right, that's JK Tyres for you, clearly down and out as we flagged off. Moving right on then, L&T Finance Holdings. And Kunal, let's discuss the charts. Pretty smart rally over the last 1 month. Can it build up from the current 102 levels? It's already at its year high.
Well, it's a very measured move for L&T Finance over the last 1 or 2 months. We've seen the stock scaling up from I think 84 levels to now 100 plus mark. Even in the last 3-4 days when the markets have been a lot more choppy, the stock has managed to make a consistent price uptrend, so a pattern of higher highs and higher lows on the daily charts for L&T Finance. I think all of that is auguring quite well for the stock, and this is probably an indicator that once the market volatility settles down, L&T Finance could be one of the prime stocks which can be of potential to rise up another 10 to 15% higher from the current level. So it's a stock which has to be on traders' radar, and traders could look out for an upside of 110 to 115 levels. Stop loss closer to 96.
Okay, on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.